Oh man, so Biden gives away this week's CPI data. Plus, will USDC be saved? We can see here, Bitcoin is holding up nicely at 20,500. You can see that USDC is now starting to repeg on many exchanges. You can see here on Gemini, back to 99 cents, 96 cents here on Kraken. If you take a look at Bitstamp, you are now at 96 cents as well. This has come after an update from Circle, which we're going to get into. We're also going to get into what Biden just revealed about CPI, because maybe he's just given the game away. A huge week coming up this week. Will Silicon Valley Bank be bailed out by the government? Investors are imploring the government to step in and take action by Monday morning. If firms are unable to get their money, they will not be able to meet payroll. So we've got a hell of a week coming up, and this could create a lot of pain. There's also been some interesting updates in the sense that we've seen that a bunch of SVB executives were selling shares around the time. This is insane. The CEO sold 11% of shares on February the 27th. The general counsel sold 19% on February the 5th. Also on Feb 27th, the CFO sold 32% and the CMO sold 25% on February the 1st. What was going on around this date? Did they know they started forming a bit of an issue, and were they trying to raise liquidity urgently? This is very, very interesting what's going on. We also need to take a look at what the updates are for SVB. You can currently see that apparently by Monday, which is tomorrow, people should be able to start accessing the FDIC insured part, which is up to 250K. The reality is they're saying that up to 50% should be possible, but we just don't know the time horizon. That's what's freaking markets out right now. You can promise them that you're going to get 80, 90% of their funds back, but it's a cash flow dilemma. People have payroll to make, so they're going to go bankrupt if they don't get their money soon. So this is a major problem, and it's interesting the politics that are going around, because it seems like this bank isn't big enough to save, right? They're happy to let this one collapse. I'm shocked that by Friday or Saturday's emergency meeting didn't convene. Somebody has not picked up this asset to protect the markets. Now, this is interesting. We spoke about this on Friday, because nobody's going to protect the crypto market, right? We don't have anybody to come and bail out the crypto market. We've had to learn how to lick our wounds and get on with it and create better and better projects. There's no accountability in traditional finance. We've seen this from 2008, 2009. They'll make the same mistakes and there's no accountability. And that should remind us why we're here in crypto, why we're opting to vote for something different and work on better projects which are decentralized, which are scalable, which are secure, which don't do all these bad practices. And if you look at the crypto projects which have failed in 2022, it's because they're exact traditional finance clones, just with crypto branding. It's not taking on the essence of truly what makes crypto and Web3 Web3. Now we need to take a look at what Biden said, because Biden was giving an update, and there was a very interesting line here in the transcript, which I'm going to zoom in for you here. Look what he said. Anyway, I'm optimistic we're going to get the CPI next week. Hopefully, we'll be in some solid shape. Now remember, Biden generally does not talk about CPI readings when they come up. Generally, he will not give away his hand, but maybe given what was going on with the crisis, with the contagion, with the fears, with the bank running that's happening in the US, maybe he had to get out just to put a message out there on Friday so the weekend could remain a little bit in calm that, look, I think CPI is going to be good. Now, what we don't know is this just brinksmanship? Does he actually know the CPI reading and he's giving it to us? And obviously some people call it CPI reading, where they just make up the numbers for whatever they want, so maybe that's the case as well. Either way, we need to take a look at the Fed rate monitor tool and take the latest pricing in, and you can see exactly what's happened. Why is it now that the market has swung again? It's flip-flopped again. Yes, now 60% of the market is pricing in just 25 basis points. And this makes complete sense, because if you imagine, part of the reason why SVB struggled was the massive hike in rates. The massive hike in interest rates over a short period of time by Jerome Powell and the Fed led many banks searching for yield in long-dated treasuries, right? It's this yield hunt. They're hunting for yield. They can't just leave their money there. They need to go and get yield on their money. And so what you find happening here is there's a lot of banks who will be doing the same thing. And now Jerome Powell's going to be in a corner where he's pressurized into slowing down. And does that slowing down mean he's just going to do 25 basis points? Or could he even do a surprise pause? Guys, I would not write off a surprise pause given the panic we're seeing in the US around bank running. Maybe he's going to pause and say, guys, there's too much lag stuff going on here. I don't know what's going on. I need a period just to pause, calm down, and if we need to do emergency 25 base point hike afterwards, we can do that. So loads to play for here. The CPI data comes out on Tuesday. We will be covering that on the channel. Smash up the likes, make sure you subscribe there as well. We're then going to have PPI on Wednesday. Thursday gives us the initial jobless claims. Friday gives us Michigan sentiment survey. And then on the 22nd, which is the week after that, we will then get this FOMC meeting where currently the market is pricing in 25 basis points. And that brings us on to Bitcoin, because Bitcoin is holding up pretty well, which is fascinating. So we know USDC is starting to repeg. The reason for that is this: Circle to cover any shortfall in USDC reserves, sparking stable coin rally. So if we go to what they said here, Circle said it will cover any shortfall in the assets backing its stablecoin USDC. In a blog post, Circle said it will stand behind USDC and cover any shortfall using corporate resources involving external capital if necessary. Again, guys, to remind you of the extent of Circle's issues right now, they have about $43 billion of USDC in the market. Of that, 3.3 billion reserves of that was the cash reserves was sat in SVB. Now, if they don't get all of that back, their maximum exposure is 3.3 billion, which is 8% of the 43 billion. Now, this is what people are not understanding. Okay, so a lot of people are asking me, how are people deciding how valuable the current USDC peg is? So let's do a bit of quick maths. So currently, we know that $3.3 billion is stuck in SVB. We know the current market cap of USDC, roughly for the use of easy numbers, is 40 billion. So what that means is that if you take that as a percentage, that gives you 8% if everything is lost that is at risk. And so if 8% is at risk, that would put you at a USDC US dollar peg of 0.92. And we saw us get to some of those levels and even slightly lower at the early signs when USDC started depegging. Now, if you play this scenario down, what you can then look at is what is the different, what happens when people start panicking? Because there's a bank run effect on USDC. So the more people who redeem their USDC, the lower the market cap gets, right? The market cap will go to 35 and then 30 and then 25 if people keep taking out their USDC. But look at what happens. As the market cap falls, the percentage that the $3.3 billion is becomes a larger percentage of the total float, okay? Because 3.3 billion assumed is lost, right, in this scenario. And so that percentage becomes up to 22% if the market cap falls to 15 billion. At that point, the peg will be 0.78. And this is the risk you now have, is everybody keeps redeeming USDC, which again, if you're advising one person, say, would you rather redeem or not redeem? Obviously, you'd say get out, it's risky, right? But at the same time, that's what creates the bank run effect. Just like SVB had a bank run effect, it's the same for stablecoins, and that's what creates the issue. But here's the thing. We don't expect fully that all $3.3 billion is going to be lost. And this is what's going to be the saving grace. And this is where you need to do a little bit in your calculations of what could be happening. So we know currently 3.3 billion is stuck in SVB. Now, what about the recovery percentage? Now we need to account for a recovery percentage. And in order to get an idea of that, let's take a look at this. So Moody's, one of the biggest rating agencies in the US, downgraded SVB to CAA2, okay? And they said that initiates a recovery rate of roughly 80 to 90%. Now, you can set that to where you think it's going to be based on your risk appetite, but really what you want to be looking at, and I was looking at the balance sheet as well, I got this from the All In podcast because it's a nice simplified version, is the balance sheet. And what you can see is overall, I know it sounds crazy, but SVB were not completely insolvent. On the right-hand side, they're $208 billion of assets to $195 billion in liabilities. That's a $13 billion in the green. Now, the problem they had was this. They held so much here in hold-to-maturity securities, 10-year treasury bills, which they could not sell without realizing a loss. So they were sat on huge unrealized losses, but they never thought they needed to touch them. Now, the problem is, loads of people, loads of startups and VC funds were not depositing enough money into the bank, less than they expected. And so what happened was, on top of that, you had a whole bunch of withdrawals. In one day when the bank run started, there was $42 billion of withdrawals. If you look at the cash, plus the available for sale, so they sell all this 26 billion immediately, and they've got $14 billion of cash, that gives them 40 billion. But that wouldn't even suffice that one day of withdrawals, which is how they got themselves in a problem. They've got enough to cover. They just can't sell all this without selling their T-bills at a loss, which therefore creates the hole. So overall, you're okay if the regulators can keep a steady ship on this and plug the gap of the bank run, they should be able to give people the majority of their money back, and it's still a decent asset for somebody to buy. So if you're assuming you can start getting a decent proportion of this back, look at what happens. So if you're getting 90% back, then really the total whole is 0.33 billion, right? And so if we plug in the amount stuck in SBB is actually 0.33 billion and you play out the scenario, then 1% is at risk and you're now sat at 0.99 on the peg. And in fact, if we give it a couple of decimal places, you'll see it's 0.992 roughly here. If the market cap stays high, so loads of people aren't running on USDC, and you're able to recover. Even if you're able to recover 80%, which gives you 0.66 hold here, taking this number from here, you can see that gets you to a peg of 0.98. Now, what Circle is doing is saying we're going to stand behind. And if you look at what they're doing, it's quite smart. If you think about it, if they're able to recover 80% of what's going on, and remember, I'm just going off the Moody's data, Moody's saying 80 to 90% for uninsured depositors, okay, then you're sitting in this range between the whole being about 330 million to 660 million. That's actually what we're talking about in terms of a realistic risk, as long as the regulators do not mess up this asset and you do not have a continuation of the bank run. If they can sort this out, you should be able to get creditors their money back, and that's the whole that Circle will have to stand behind, okay? So hopefully that makes sense for you guys. Let's now jump back into the Bitcoin chart. Bitcoin holding well here at that 20,500 mark, and again, no surprise, whenever you see panic around stablecoins, and by the way, remember, we had a panic on DAI as well, which is now starting to repeg 0.96 and 0.992, because a lot of their collateralization is held in USDC, around 30%, I believe, the last time I checked. So Bitcoin is holding pretty well, because when there's issues with stablecoins, people realize, oh wait, Bitcoin is the one thing we know is safe, that's been around the longest, that's truly decentralized, truly immutable, there's no games going on, it's a commodity, nobody's arguing otherwise, this is the one I want to be in, right? And so you're seeing it hold up pretty well. Now, if you look at it, it's also interesting because you can see from here, we are still in, I know it sounds crazy, and you're not even going to believe me, but we're still in an ascending channel, right? If you sit here on the 4-hourly, we're still in this ascending channel. We said that we can even hold support from this line. You're starting to see support come in. If I switch this down to the daily, you will see that after breaking down from our double top, we're now starting to pick up support from our price target here. So now we need to see is if we can have a good week. And what I mean by good week is, can the contagion stop? Can the panic stop? Can somebody save SVB? Can people get their money back? Can we get a good CPI report? Can we get a good PPI report? Can Jerome Powell lead us in towards a 25 base points or maybe even a surprise pause? That would be our bullish case. Our negative case is the opposite. Contagion continues, right? Contagion continues, fear continues, more bank runs continue, nobody saves SVB, bad CPI, bad PPI, and then, guys, I will be prepared for us to breach 18,700. Yes, 18,700 is the bottom of this channel, and I wouldn't say it's crazy for us to do something like this, which is where we're falling, we have a little bit of relief, boom, bad data, and we go down towards that 18,700 and potentially even breach it, right? Because things can get bad quite quickly here if Jerome Powell, if Janet Yellen can't take control of the situation in the US. One more thing it's worth showing you guys is look at exactly where Bitcoin's bouncing. This is very interesting. If you took the swing low to swing high here on the Fibonacci extensions, we were monitoring on this way down and said, we didn't hold the 0.5 level. But look where it bounced, exactly at 0.382 level, trying to work its way back to the 0.5% Fibonacci ratio here. But remember, the 0.5 level can act as resistance as well. So you can fall, you can get support from 0.382, go up to 0.5, and you can get rejected. If none of this is making sense, ijaz.uk/TA, completely free TA course where you'll learn all these things. Fibonacci ratios, Bollinger Bands, EMA ribbons, the lot, it's there. Speaking of EMA ribbon, let's bring that out. You can see we're hugely extended here on to the downside here in the bearish sense, and the biggest thing we need is to work our way back to the EMA ribbon. I know that's a long way away from now. Ideally, we just want to hold some support and try to go sideways, but eventually we need to be getting back to our EMA ribbon because it's about to flip, okay? The lighter colors are about to cross below the darker colors on the EMA ribbon, and that normally means a powerful move to the downside. Let's also take a look at the Bollinger Band. And the Bollinger Band, you can see we're trying our best to hold support here at the bottom of the Bollinger Band. If we lose this and we break structure, we could have an explosive move. Like how we had explosive move to the upside here when we broke structure, you can have explosive move to the downside here when you break structure. And the unfortunate thing there would be, not only would we have a move to the downside, but we'd be giving up a lot of our gains when we moved parabolically here in early January. We'll be dropping similarly to fill that gap to the downside. Speaking of the gap, let's also take a look at the volume profile, which is your VPVR, and you can see exactly what I mean. This is not hugely traded here. If I just move me out the way, you can see what I'm talking about. Look how small those volume candles are here around this region. If we lose this 20,000 mark, you know, support really does start to dissipate. So if FUD continues, if macroeconomic issues continue with the banking sector and the contagion, expect a little bit of pain. I'll personally be prepared to buy the dip at certain areas. I'm not going to panic. I'm not selling. I'm not leaving. If anything, these failings just remind me why we need to be in crypto, why I need to be in crypto, and it further resolves my conviction. Go watch this video here, and I'll see you in the next one.